Good morning, everyone. Well, inconclusive data yesterday led to a trendless day with the dollar ending mixed. The big surprise was a sharp negative reaction to a rise in continuing claims. Although apparently this isn't unusual for the first week of the year, nonetheless the markets took it pretty hard. The tone in the markets was quite different from the strong U.S. economy, strong U.S. dollar feeling that had prevailed earlier in the week. 10-year Treasury yields were down 5 basis points, and the stock market fell from the record high that we had earlier in the week, aided by some disappointing earnings. The strength of the safe haven currencies, the yen and Swiss franc, was noticeable. The yen was supported by statements from U.S. Treasury Secretary Liu, who said that Japan needs to get its domestic economy growing and can't rely on a weaker currency for economic advantage. This ignores, of course, the fact that Japan's monetary policy is exactly the same as U.S. monetary policy. Now, given the recent current account deficits in Japan, I don't think it's surprising at all that the yen is weakening, and I'd say there's more to it than just Bank of Japan policy. The weakness seems to me to be fundamentally based and therefore likely to continue it, in my view, especially as the trend in the U.S. current account is the exact opposite of Japan. Take a look on our website. We've got a graph showing this trend. Now, I was also surprised that the dollar Canada was so little changed, even after the Canadian Prime Minister said the depreciation of the Canadian dollar actually reflects the strength of the U.S. dollar, which he said has been undervalued, rather than any weakness in the Canadian dollar. That's really a way of saying that the government doesn't object to its currency falling, which usually would trigger a round of selling. At the same time, the facts back up what Mr. Harper said. According to the OECD's valuation, the Canadian dollar is, in fact, 24% overvalued relative to the dollar on a purchasing power parity basis. The OECD estimates PPP value for dollar Canada to be 124. I think the market may pay more attention to that idea as the next Bank of Canada meeting draws near on January 22nd, and I'd expect dollar Canada to move higher still. The only important releases coming out from Europe today is the UK retail sales for December. We're expecting an acceleration in the year-on-year rate of change, which would confirm that the consumption-led recovery in Britain is intact and thereby support the sterling. In the U.S., we've got housing starts. They're expected to have fallen in December, but this seems quite reasonable after a real surge in starts in November. Building permits for December are expected to be kind of lackluster, while industrial production is expected to have slowed. On the other hand, the U of Michigan Preliminary Consumer Sentiment Index for December is expected to rise. So net mixed numbers like this may not give us any more clarity on the economic picture, nor any clearer trend in the dollar. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.